And good day. This is the Eye of the Storm podcast with the big picture technical update for the S&P 500. It's being recorded on Saturday, March the 30th, 2024. Again, if you didn't see that I added the comment, I apologize for suggesting that Globex would be in operation Thursday afternoon, evening till Friday morning here in the U.S. That was not the case. PCE numbers did actually come out on Friday, and Powell, who happens to be in my hometown, San Francisco, where I live, did speak from the Federal Reserve Bank here about how they're still maintaining target, et cetera, et cetera. So nothing really to add there. So, but I would still anticipate some kind of a reaction. It may start tomorrow in the Globex session, or we will wait until our markets open again on Monday morning. Now, what that reaction may be is that we have the naysayers who are really now counting on some type of a market or an interest rate cut in June. And so I think what we're seeing via PCE is that inflation continues to nag, continues to chip away, continues to just not necessarily improve, or on one level it does, and a different factor within it does not. So how all that is going to be interpreted is going to be reflected back into the market. Also, just I'm going to start here with the SPX. And before I get into the cycle aspect of it, or the cycle work, I did get a couple of requests to, when I'm repeating or when I'm going over the big picture, to really take it all the way up to grand supercycle. And so I'm going to give you my opinion on grand supercycle. And I have it here, and you'll see it's the dark blue, and supercycle being the sky blue, which is the one in front of it, of course. This grand supercycle, if we're still in grand supercycle wave 3, which began off of the 1932 lows in the SPX, then this thing has been in operation for over 90 years. We're now getting ready to put it in for 92 years. And with that in mind, this is only grand supercycle wave 3, which I would anticipate is going to be in operation for at least another 2 to 5 years before grand supercycle wave 3 may be complete. And I don't think it actually will be complete, because what we're still, if we follow it up, we are still within supercycle wave 3. And supercycle wave 3 has been in progress since 1942. Now, based on that, we could say, well, what has to happen first before supercycle wave 3 is complete? And then what would happen after that for grand supercycle wave 3 to be complete? So I misspoke when I just said, maybe, 2 to 5 years, because what we're looking at is we keep coming down, right? So we have grand supercycle 1, grand supercycle wave 2, supercycle 1, supercycle wave 2, cycle degree 1, cycle degree 3, 2, and up here at the current highs, or the highs that were registered in January of 2022, is where I have placed cycle wave 3. Well, that puts us in a cycle wave 4 correction, and that still is not totally complete. We might be getting very close to entering into the primary degree C wave down, which would then put the finishing moves on for cycle wave 4, at which point we can begin cycle wave 5 up. And then once we reach that high, which we don't know because we don't have any levels in which we could start to build our picture, then we would be finishing after cycle wave 5. We would then be putting in the top for supercycle wave 3. Supercycle wave 3 with the one that I think we might be expecting between 2 and 5 years. And once that's done, then we have a super cycle wave 4, and then a super cycle wave 5 back up. So the major super depressive decline that everybody wants to consider in a grand super cycle wave 4 is so far out there. It's like, I don't really even look at it. I don't consider it. I don't feel that it's even worth, well, it could be worth on a educational basis or just on a conversational basis. Sure, you can talk about it. But considering that since I've been trading, right, I started trading in 1979. And so here pretty much is where I started trading. Let me go back. Nah, that's 10. I'm way off my basis, right? 1979, right in here. So that was my beginning, right? That's 1980. So I first got it where interest rates went through the moon, et cetera, et cetera. So I started in 1979. And so that was in the middle of a primary third wave, which, by the way, included right there the October of 1987 end of the world crash, right? I mean, I was not on the trading floor that day. I was actually in London signing a contract to trade in Europe, and was wondering, oh my God, what's going on? So, but here you can see it barely even registers. It does show up, and this is the monthly maximum chart. It does show up, but then look what followed. Look what followed. Look what followed. This is the great financial collapse. That's what they're calling it these days. The great financial collapse of 2008, 2009. Look what we've done since. Here's the pandemic that we were also confused and the world was coming to an end. Look what we've done since. So again, the wave patterns themselves have remained, and I'm going to say this on an extremely long-term basis, remain in a bullish posture. You can bring down your time frames if you want to start talking about, well, what can the market do? Because I find so many times that people are like, they're waiting for, they get a lot of delight in considering that the market will crash. We'll see all these people that have been pushing so hard lose their money. And it's like, it doesn't really make any difference. That isn't going to do anything. But what we can look at and what we can consider is the natural ebb and flow of the market. And the reactions right now on a technical basis, folks, the market starts to exhibit weakness, but we have to gain our triggers. We have to understand that there are points that, if even on a technical basis, that if the market should break, then that's going to be more indicative that a little bit larger correction is going to be coming through. Now, yes, there are economic factors that can come in and upset the apple cart, so to speak. Yes, there are factors on a global scale, right? A geopolitical scale that can upset the apple cart. We've seen hints of it. We've seen tastes of it when Russia invaded the Ukraine and decided that they were going to take it back and produce that war. When Israel is now at war in the Middle East with Gaza, the fear of that spreading and what could possibly happen, the fear, and this is what it is, or concern, let's say, that Vladimir Putin will lob a nuclear weapon. Who knows what the size is? Anything happening on a nuclear level would definitively upset this apple cart called the U.S. markets. It would upset the global markets. How do we want to prepare for that? Who knows? It's like, well, when is it going to happen? Who knows? But these are the shocks that could happen. So my position is, it's like, as a technical analyst and an Elliott wave analyst, I show the probabilities. I show the possibilities. I show the potential for a market. And now I'm adding or re-adding and discussing more cycles. Time cycles are important and have an effect and a pull on the market, whether we want to accept that or not, they do. And when you have regular cycles between a 1 month and a 3 month basis, you can really build yourself that short-term picture as to what the market can do. And based on those cycles versus the market action, you can determine that the market right now, since the October 2023 lows, the market has not shifted outside of a bullish posture. And yep, I'm using that word, the one that I don't particularly like to approach a market saying bullish or bearish, but it has had a bullish bias, an upward trajectory since October of 2023. Now, is it late in that game? Yeah. Is it late cyclically in that game? Yes, but it has not turned yet. It has not given, it's giving us hints that, hey, we have a period of risk here that we're coming into. Why? Because we have a 1 month and a 3 month all coming in and really starting to put in the heaviest part of their down cycle from late March, which, by the way, folks, here we are. You can't get any later in March than we are right now. We have 1 day left. And it now goes through the end of April, early May, because there is a possibility that the market it truly starts to cave late in the cycle that's turning lower, but then it also could bottom late as the cycle has bottomed and turned and showing higher. So that's why we have right-hand, left-hand translations, which is another subject. Now, so here we are inside this period of risk from late March till the end of April, beginning of May. Excuse me. So back to my chart. So when I look at this and I'm presenting, you want to know what grand supercycle? We're inside of still forming grand supercycle wave 3. Where are we inside of that? We are in minor cycle wave 4 of supercycle wave 3 of grand supercycle wave 3. So both of those are still in. So that would be the largest count I can give you. Now, bringing this down, let's take it out of that monthly and let's go down to a weekly. That takes us to this high, which is pretty accurate, but not quite. And that is the high where I placed cycle wave 3. Yep, we have new highs in here. So, but just to kind of go over how I am viewing this market right now, cycle wave 4 will consist of 3 waves of primary degree to be labeled primary wave A, B, and C. Primary wave A is complete. It was an ABC on its own. There you have the A. Now we're in primary wave B. It will also consist of 3 waves of intermediate degree to be labeled A, B, and C. And it's kind of turning out that in the internals in this was A, B, and then a C. So not necessarily a zigzag, but kind of a zigzag a flat, not a flat, but a straight ABCB. And then we're in a 5-wave C, as all C's must be 5. So we're in the C wave heading higher, and it will consist of, on an intermediate degree wave C, it will consist of 5 waves of minor degree labeled 1, 2, 3, 4. We are in, I'm going to bring it down out of there, going to bring it down to the daily. We are in intermediate wave C, minor degree 1, 2, 3, and 4 are complete. We're in minor wave 5 up. So you can see here is October 2023. It has not registered negative. So when I say that the cycle continues to suggest and confirm the market has remained on a bullish path since October of 2023. Why? Because we're counting out. Now I can translate it back over to Elliott. We're in an intermediate C wave up, consisting of 5 waves of minor degree, of which we have 1, 2, 3, and 4, and 5, where minor wave 1, 3, and 5 are all to the upside, 2 and 4 are corrective. Well, when we look at on a chart, they were both during cycle downturns where we had wave 2 and 4. So all very clean so far. So we have no reason to deter from this count, even though we have made a new all-time high and continue to produce new all-time highs over and over during the sequence. Now, that suggests and means that primary wave B has formed an irregular B wave. What does that mean? What means that the B wave itself, which normally would not exceed the high here of the starting point of the A wave, does exceed it. And when it does, we apply 2 additional fib retracement levels where that B wave may come in. The first one is 1.236, which held pretty firm for quite some time. And then it got broken, and then it got broken substantially, which raises the bar to 1.382. Both are common, 1.236, 1.382. They are common within an irregular B wave. Now, what makes this one a little bit more, I don't want to say exciting, but a little bit more special, a little bit more noticeable, is that we're at all-time record highs, and which just has got a lot of people into, we've got much more to go because it's still in that bull market. Now, this is the point at where I would come in and talk about an alternate count, which would continue to cover us. But the best that I can do on an alternate is that what we have here is this possibly being an ABC down. I would move these to primary and put cycle 4 here, because I have a whole lot of trouble changing all of this any lower than it is to allow a cycle degree 4 to be put there, or to count out that we're still, that this is primary wave 4 and this, and I need to change these back. No, I don't. See, I have a primary wave 4 here. This is 5, and this is A. But if I don't, then I'm going to have to change this to a 3, put this down as 4, and I know that this is not clean, and I apologize for that. I just forgot to go back and do it because I've been focusing on here. So the alternate would be that this is primary wave 4, or it's cycle wave 4, and we're in a cycle wave 5 up. That's my point, is that I do have a lot of trouble moving and putting this as primary wave 4, and we're in a primary 5th wave. But if I put it in cycle, then this would be primary 1, primary 2, we're in a primary 3, and we truly would be looking at these levels. Now, I don't necessarily see those under the current conditions, under the current way that the markets are moving and what's actually pushing the markets. You would think that on a bull market of this size, that many of the sectors would all be inclusive and all be operating on full steam. And we adding to that, during our periods where we saw tremendous strength, interest rates were low. Interest rates are stubbornly, I'm going to use the word stubbornly high. And so rate cuts, everybody wants to hang their hat on, they're going to happen, so keep buying. But as well as the Fed saying that, yeah, we're sticking to our target, we're going to get there, and that may happen. But you see that we're now late in the game. And so I don't think this is a cycle fourth wave. If I did, I likely would move it to possibly a primary 4. And this is intermediate 1, 2, we're finished intermediate wave 3. We have an intermediate wave 4 decline, and then an intermediate 5th wave, which could take us up to here. And then we get the completion point for cycle wave 3. And the market just tumbles. Now, these fibs are for if cycle 3 ended here, where would cycle 4 end up? And so so these were the original, right? I had said like 2,900. I went down to 2,400, which would included the previous fourth of one lesser degree. But we'd have to up that. So if cycle wave 4, then these are going to get pushed back to primary degree, and this is primary fourth. That would be the fourth wave of one lesser degree, and you can see that we're into it. Even if we come down here, we're into that price territory. So that meets that. So not necessarily the terminus, which would be all the way down here at 2205. Now, what else can I add in as we advance out into, well, what can even primary wave C begin to look like? If these are the fibs, they remain active. But again, because we've kind of gone up and we're now going to be retracing back, we would then start to look at, excuse me, the possibility, and I'm just going to, for the sake of this argument, or this discussion, it's not really even an argument, is it? I will use a fib level, but I'm going to take it up to that point, saying that the market gets up to 53. It is like 53.33. But let's just say it gets up to that 100% level, 54.10-ish. And I'm going to put it there. Well, you can see, so what I'm demonstrating here, this is just a speculative point in time. I could take it up to our current level, which that's what I'll do. Let's just say, even if we don't get any higher, which I expect that we will, but if I had to go with this and bring it back down to our current high, that's right there. Come on, get up there. Hold on. Let me just open this up. Oh, excuse me. I'll get to it. I just get so frustrated with my computer. This, I want to activate it, and I want to move it up to here. There. All right, so even if I did that, and let's go back out to my full daily chart. Let me open it back. Come on. All right. Go back out to that weekly. So now, what does this tell me? If I'm looking at the possibility, right? We have the irregular, and it gets up to, doesn't get any higher than we already have been. The C wave would commonly come in at 1.618. That's only 3,100, we'll call it. But a flat, which would bring it down to here, because it exceeded that high, we go that equal amount to produce a more of a flat, allowing for a flat, because it's part of the flat family of corrective structures. So you begin to see it's like, well, that's not the end of the world. Yep, it's a nice tumble. But folks, October of 2022, we were at 3,500 after being at 4,800. Well, now we've gone up to 5,265. Is if we're going to have a strong enough where we actually do get deflation, where we actually see things fall back into line, where we actually see the larger cycles top and start to pull the market down. So I'm not even saying that the bulk of this has to really happen in 2024, but it certainly can stop, because don't forget, I'm looking for a C wave down. The whole process is a primary C wave down. What's inside of it? 5 waves of intermediate degree. What's inside of intermediate wave 1? 5 waves of minor degree. So we're back to looking at what's inside. So from October of 2023 to the current levels, we're working on a minor degree 5 waves up. Well, when we start to head and we're going lower, the first move down is going to be an intermediate wave 1. Starting from what's inside of minor wave 1, 5 waves of minute degree. What's inside of minute wave 1? 5 waves of minuet degree. So we've got a lot of building this as we start this whole process. It's not just going to fall off the cliff. It's not just going to, it will seemingly start by giving us a decent drop, but we're looking at maybe a 5% to kick it off, a 5% drop, which is still going to be pretty strong. So really what we look at here, what's going to be a good clue on a cycle basis, that the market may have put those tops in and is now cyclically turning lower as the cycle goes with it, down for the next month. What's going to help us really determine that? Well, I'll tell you, 51, I believe that number is 5173, and we might even take it down to 51, let's say 5150. We'll give it a nice little window there, 5150. So we're still above 5,000 that we would start to look for. Okay, we're starting to get some confirmation that possibly we're done. We're done with this intermediate degree C, and within it, minor wave 5. But now let me bring it down. Now we're looking at the daily. What do we got left? Well, here we are in minor wave 5, which is going to consist of 5 waves of minute degree. Let me bring it down to this 4-hour chart. Let's take a look inside. What's inside there? Well, we have 5 waves of minute degree, which we've just possibly finished wave 3 on Friday. Now, this is via the cash market. If I go over to the futures market, which I'm going to do in a minute, it's not the same. The futures market continues to trade in Globex. Now, if we get a nice little downswing based on PCE, based on how market interpretation, whatever they feel like doing, if they kick this off with a downside, then I think it's basically just going to be a minute 4th wave. And then what am I looking at? Here's your markers, 52.15 to 51.85. So 51.50, then we're starting to break. And here's what we got. On a minute degree, wave 1 is at 51.50. So if it starts to come down in a minute 4 and it breaks 51.50, this is the cash market again, well, then you're starting to get an indication like, okay, is that all done now? First of all, my guess is going to be I will have to wait to see, because right now I'm like, well, no, I'm not even looking for that. I'm not looking for it to come that deep. So I think we might have an initial down, smaller, and then up, and finish minute 5, somewhere closer to 53.25. Possibly higher. If I get a smaller 4th wave in here and then a turn, that'll be a good thing, because it's going to help with the count. It's going to help the position and not necessarily discredit the cycle work. Remember, the period of risk on the cycle basis is late March through late April, early May. it's a whole month. So we still can get in a little 4, go up and finish the 5, finish the wave C, finish the primary B, and then begin our first series, several series of 5 waves down. And once we start to get there, then we'll be able to put more definitive markers in and around everything. Now, I need to also point out this is a 4-hour. Let me see if I can just bring that in a little bit. Look at this. RSI really topped, back here in December. And ever since, the RSI has not been able to, with all these rallies pushing to new highs, has not been able to make additional new highs, even sequentially. And now here we are breaking to new highs again. And there we have, here is here, lower high. Here is here, much lower high. Here is here, or you can call it there. And then this is here. So lower volume, lower participation in terms of all the components. These are signs. These are signs that we start to see where it's like, yeah, that was a bullish move up there. And yeah, it got up to an additional new all-time high. Basis the cash market got up to a new additional all-time high. Maybe it just completed 3, then we get a week 4, and we get a 5. And that 5, I don't suspect that we're going to get an RSI that's going to be like, all right, yeah, go, 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 go. So it fits into what my wave pattern is telling me, that we're in a finishing move versus a breakout in a larger 3. So I still think we're finishing. And then we will have, and it could be the kickoff. It could be the kickoff to a much larger C wave down, but it will be a kickoff that we get a 5 to 7% decline, maybe an 8%, 8.5% decline to kick off that larger wave. Don't forget, it's going to come down in a 1, 2, 3, 4, 5, and it's going to do it on a minute basis. It's going to do it on a minor basis. It's going to do it on an intermediate basis, and then on immediate level, it's only going to produce wave 1. Then we're going to get a decent rally in wave 2 on an intermediate degree. So I can open this. It's been a while since we've actually functioned under that level in terms of, but intermediate degree, intermediate degree, intermediate degree coming down. All right. So if we're coming down intermediate degree on a wave 1, intermediate degree on a wave 2, it was a decent rally. 36 back up to 43. We'll get decent rallies. Nothing will go straight down. It will work its way lower again, unless, there's always a caveat, unless the catalyst is catastrophic. And that would be something somewhere within the economy blows up. Somewhere in the world, a nuclear weapon is used, or something happens geopolitically that could trigger a much larger war. I don't know, the conflict, where we see things spread and grow and just produce something that seems it's out of hand, that's disruptive to the economies, that's disruptive to the flow of everything within the global economy. That could toss it and just boom, down it goes. So in the meantime, honestly, folks, in the meantime, on a short-term basis, so we're looking at even our smaller monthly, 3-month and to monthly cycles, since October of 2023, we've not broken anything. Everything remains pointing higher. We're in a bullish cycle. Now, again, what will start to tell us that that's changing? We begin to break down. And via the SPX, I think, in my opinion, we're going to get that first glimpse of, what's going on a break below 5150. There are additional breaks below. On the spiders, you're actually looking like it's going to, if it needs to break below 40, 498, 495, for it to really start to kick itself and go like, something might be all done. Now, that's a lot of technical talk that I've kind of tried to toss into the cash market. So I hope you realize that even when you want to go, what's the biggest count you got? It's bigger than I'm going to be on the planet. So I don't think in terms of what happens when we get to a grand supercycle wave 3 high. What's a grand supercycle fourth wave going to be? I'm like, well, I don't know, because I think the markets and how we transact and how things happen are going to be under a totally different system. Right now, though, I will talk about supercycle and cycle degree, because that's what we got to deal with today, tomorrow, and coming up in the future. So for right now, I continue in the SPX to feel that we are finishing up a primary B wave counter trend rally. It still has upside potential. So I do not rule out an additional run above 53 and even towards 54. So even if I'm looking at all of this, we have 54.15 above. We have 57.22 and we have 58.81, which cannot be ruled out and say absolutely not, never can happen. If we get a smaller wave forward and then we get all these cycles pointing up again, along with the 4-year presidential cycle, cannot forget them. And if they all start pointing up, then everything's going to get politicized, but I'm not even going to go there. So, but then can I count out 57 or 58? No, you can't. You really can't. 5,500, which is a number a lot of people are using. I can pull the fibs. I can put them there. I can show you, but I am not in any way, shape, or form going to say, well, that's where the market's going. Let the market tell us. We can show the potential. I can put a probability scale that I'm still looking for an additional new high. Probability of getting above to 53.25 is pretty strong. But guess what? It's got to get through 52.65 first. And right now it's having trouble. It got there on Friday, but now it's going to come off and it's got to get back and go back above it. And how much higher can it really go? That's the ticket. Right now, I am looking for it. And I have 54.68, 60, 52.75, 5,300, just because it's a nice big all around number, and then 53.25, which is the 1.382 for the primary B. Ultimately, that's where I think we could go. Now, let's go over and take a look at the ES before this becomes an hour. And I apologize, but this is all necessary. So same deal. Here we are on that weekly chart. Same deal, right? I am going to change this back. I got to redo it to bring the primary 3 and the primary 4 back here, because I'm leaving this as primary 5. I just never really go out that far. So in cycle wave 4 is what I believe is still in progress. There we have primary wave A. We're finishing up a primary B wave counter trend rally. Inside we have, of course, these are all due to, they see the cash chart. It's beautiful because it all stays in place, because you don't go back and adjust for a cash change every 3 months. So, but these are the contract rolls. So I'm going to come down right off of this and I'm going to go to the 2-year or the daily 2-year. Now we have our correct levels. So again, we have 1.382 here is at 53.07 and we've been above it several times. Another thing, I think we're finishing. What needs to catch up with it is that the cash maybe needs to go to its 1.382. And what would that look like here? Because I think still between the two, we have 52.54 and 53.04. Now we still have 30 bucks, 40 bucks premium in the future over the cash. So if the cash needs to go to 53.25, oh, could that be equaling 53.93? Yes, it could. All right, so let's start walking this down. We're in the C wave up. Intermediate degree is going to consist of 5 waves of minor within intermediate C. Minor 1, 2, 3, and 4. Let's bring it down. What are we doing inside? We have 4. Let's go like this. Now let's open this up. Okay, now we got the whole shebang going here. Now, there's the minor 4. So here we have 1, 2, 3, 4, 5. It's not the most beautiful. Some of you might consider that it should be 3, but it's not. It's a 5. Minute 1, minute 2, and we did it again. Minuet 1, minuet 2, minuet 3, minuet 4. We're still trying to finish minuet 5. Did we do it on Friday? Possibly, but we didn't break that 53.22 high. And that's what I really want. So you see what I got? 1, 2, 3, 4. Maybe sloppy, but maybe. Then a very small failure. Let's see what happens. It may just kind of pop real quick. Tomorrow afternoon, evening, and Globex, it counts. Get it up there, do it, and then we put the 5, and then we get away 4. And what's that going to look like? Well, we're coming back probably to 52.63 on a 4th wave. Wow. What that matches up? It matches up perfectly with what we've already done. And we're basically not even looking for it to get very much further. So if we use the same fib again, we're pulling it back into the same area again, 382, maybe a little bit lower. But here again, we're running into, if it's going to be in a minute 4th wave, minute wave 1 topped out at 52.21. Well, even if it goes up, I don't know, to say what it could do. Here we have it. Here's what it could do. 618, 53.43. If it goes up to 53.43 and then starts to pull back, well, okay. We're still looking for 52.63. But we're already above 53. We closed above 53. We came back down, but we're still above 5,300. So I think we need one little more push to 53.43. Finish up. Minute wave 3. Come back in a minute 4th wave. And that minute 4th wave could take us even a little bit lower. Could. We just cannot break 22, 21. That disqualifies a lot of stuff. But we're looking for these completions. Once in place, we have, let me open this back up again. And let me put in, here is minor 5. We got 54.85 all the way up there. And here is this minuet wave 5, 53.43. Otherwise, if it goes to 100, which is equality, we're talking 53.93. Can it? Yeah, it can. It can. I'm not going to deny it, but we got the same thing going on 4-hour chart, and here we have an RSI. So up and equaling it, look at that. Look at that mess. Do you understand now? Relative strength declining and it came up and equaled the high. Not a pretty picture. We're in that period of risk for the market. And that risk goes late March to late April, early May. So I really am looking for this to finish itself up. If I had to change the count, I would work it out to where it be. We got a lot of junk going on here. So my best count is 1, 2, finishing 3. And I really don't even think I could put a 3 here because I don't see a diagonal anywhere within the S&P. I don't see it. Maybe I'm blind, but I don't see it. So I got the X, WXY, WXY, it's a triple, S4. We got that. Then it rallied nicely. We got into Friday. It rallied nicely. Finishes up. Possibly. I mean, there is a chance we just do this pullback in a minute 4, and I put the 3, and then I put the 4, and then we're off to the 5th, and then we're done. We get done with this. And then the pressure of the cycles pull it in. So it's a late top in the cycle. We'll see. Now, let me bring this down one more. I want to look at the interiors. See, we got this. This is the interiors. 1, 2, 3, 4, 5. I really got it. And then it comes way below. I'm very, very tempted to put the 4 and the 3 here. And then we're going to come back down. And again, I'm just going to leave it because where we're going to come back down to, we got this again. So if we can get back down even as low as here, 52.45, in a 4th wave, in a minute 4th wave, so it's going to be an ABC down, and we get that minute 5th wave and we get back up, I'll redo it accordingly. But if we're working out of our larger levels, where are we going? Well, this would be 100% for somebody, and I gotta just not putting anything in here. But unless wave 2, now we're looking up here. So let me put this out. What have I got going on here? Let me go back out to my 4-hour. Hold with me 1 second. But I like to get these lined up to what we're looking at. So that one is quite a bit up there. This one's all the way up here at 54. These are lining up for something else that I cannot see. There to there. Okay, no, that's that. If I hit, now hold on, stay with me while I figure out what is this being pulled from. Aha. So it is the wave 5. So the wave 5. And so if it ended there, then I got to take those off. So, and then what I would have, and again, I'm leaving them on because we have that shot for 53.43. So let me just change this around just a little bit so that I can put in what we have coming next. And let's just say we have that back down to this level, right? 52.63. And then what can we expect from a minute wave 5? And hold on, I got to change this. Go back and do it again. And we're going to go to 52. What did I say? I'll just stick it there because I don't know what that is. Okay, so here we have, here's the 100% back up at 53.48. So again, even connecting this wave 1, so we're not off by all that much because before we had that wave 1 to there, now we have this larger wave 1, and 618 is 53.99, and then the other one is 54.87. So again, minute wave 5 does have some power where it could get up there, but what we're looking for here, this would be the 4 or the 5 and the 3, and we get the 4, and we're looking for 5 waves up. And if we get 5 waves and we don't get to there, because again, remember the internals of the market can continue to kind of decay a little bit. If they kind of pick up and go on again on Monday, and into next week, well, then that's going to be a different story. But this whole period of risk is now the topping of the market versus the cycle is going to turn into a much different translation. Anyway, we'll get there if it happens. Now, bringing this all the way down, let's take a look at our 15-minute chart. We get the 4, that would make this the 5. See, even on the 15-minute, not looking real healthy there, right? Got up there, and there's one, bam. So they sold it hard. Now, so that tells me that it's likely inside this 4. So it would be the minute 4. And that minute 4 brings us back down to here. So what we're really kind of looking at is maybe a trip back down to 52.63 and then a turn and a rally. Although we have that, it's going to be, yeah, I think it's really probably it's going to come further, but we do have points of support down below as well. So that's going to be the story. Now I know I kind of went into it. I will be looking pretty closely as to how things open up tomorrow and during Globex, and if necessary, I'll jump back in. Otherwise, I'm very, very tempted to put that 5 and the 3 here, and we're coming down into 4, and this is just going to be the A wave coming down. We get a little bit of a rally, and we drop back into this area, and then we put the 4, and we rally one more time to finish this whole thing off. All right, that's where I'm going to stop. Our moving averages all are still in pretty good shape. Let me go out to the daily chart and let's take a peek. Pretty good shape. There's the 13, the 20, the 50, the 200, all looking pretty good. 13's not turning around and breaking below the 20, still holding, excuse me, holding and heading higher. So I think our moving averages are sitting pretty good for right now. Even on the 4-hour chart, still the same. When the market starts to break the 13, it's going to give a little bit more oomph to the fact that we're in that little bit larger 4. Fits where the cycles are pointing to as well. So we'll see. And thank you very much. And next update will be the Elliott Wave update on Monday, April the 1st, and no April Fool's jokes. So enjoy the balance of the holiday weekend, and everybody have a really great Easter with family.